Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, August 23rd. Hope you're having a great day so far today. We do got a couple economic items here on the calendar, so we'll start off with the existing home sales for the month of June. So, in the month of June, we actually had a revised report in May. It was risen up to 5.36 million. And then forecasts were calling for June at 5.33 million, and it came a little bit lower, so at 5.27 million. So basically, what this means is that uh, without the revision, we had a drop of existing home sales of 1.7%. I'm sorry, with it was a drop of 1.7%. But if you remove the revision, it was actually only down 1.37 or 1.3%. So not quite as bad as we had thought, but you got to also look at the previous report back in May. It was actually a pretty strong report. It was right around 3%, so it was up 3%. So a very strong report in May, which makes June's numbers not doesn't look as good, not look as good. So we got to be careful how the media is printing this out, because media is going to spin this like this is really terrible news, and it's not quite. May was a very good report that came in stronger, and it was even revised even stronger than it was when it came out last month, and it dropped a little bit. So just take that for a grain of salt. Just be careful when you're listening to the media, because the media needs ratings, and negative news brings ratings. So to carry on here, we got the FHFA home price index. This is basically the con- homes with conforming loan limits on their homes. So this is kind of gauges where we're at. And this too had a revision for April. April is revised to 4%, up 0.4%. In May, it went up only 0.1%. This brought us our year over year to 5%, but April jumped from 5.2 to 5.3%. So now we're at 5%. So still pretty strong numbers. Most people are, the lower end, as we can see, there's still a little bit higher appreciation levels due to the cost factor, where the higher end homes are probably seeing a little bit less appreciation levels, uh, like the lower cost homes here. So let's go ahead and jump ahead here to the headline news. Headline news: we got the stock market's up. What's pretty much taking center stage is corporate earnings reports. We're getting a few corporate earnings reports that are kind of heating up the market a little bit today. Uh, Thursday, we got the ECB, so they're looking ahead to the interest rate cuts. They're still kind of looking to the Fed later this month, which is the 30th to 31st. And then ECB is meeting this Thursday. And some people think they may, since the Fed announced their cut, they may even cut in at this coming meeting for the ECB. So we'll have to wait and see, but they are expecting pretty dovish comments here. In the UK, they got a new um, leader there. He just took over the Conservative Party, which will thus be placed into the Prime Minister, and his name is Boris Johnson. So he's pretty much a hardliner in terms of the Brexit. So we may have. It'll be interesting to see how he proceeds with the Brexit. So again, stay tuned. See what happens with him as the new leader. So let's kind of jump ahead here to the bond market, see how things are playing out. We are up about 3 basis points or so. We're still above the 25-day moving average in the Fibonacci. Not quite enough for any change of pricing, so we're kind of, as you see, this kind of sideways pattern here, which is fine. We got a lot of room to grow here, and we did test, as you can see here, the floor of support earlier today. And here's the 10-year. We're kind of hanging right here, about 2.04 range here at the yields, and we're kind of trying to fight our way through this here, this 25-day moving average. The yields are trying to push it. So over the last few days, sideways pattern has been kind of between the 25-day moving average and the Fibonacci. If this can get pushed lower, it will help out mortgage-backed securities even rise further. But right now, this is they both been kind of going in a sideways pattern right here. So to conclude, basically, mortgage rates are unchanged from where we left off yesterday. We're just kind of right now kind of going the sideways pattern as we've been the last couple of days. If you guys are looking to buy a refinance, please reach out. You could best way to reach out is a direct message. I am a loan officer, and my company, the company I work for, is a lender of all 50 states, so we can help you out no matter what state you're in. We are home to two proprietary loan programs, and that is the all-in-one loan and also the home funded. As like pretty much everyone else, we do cover the jumbos, we do cover conventional, we do have FHA, VA, USDA, and we also carry some niche loan programs that some people do not carry. We got some that are specific for real estate investors, as well as the bank statement program, which is especially important for those who are self-employed borrowers. And we got four national loans out there. So you guys have a great rest of your day. Thanks so much for watching. And again, if you guys are needing anything for buyer refinance, please reach out and love to be able to help you out. You guys have a great day and see you guys tomorrow. Bye bye.